I'm Matthew Galgani with a quick look at how to use the selling checklist to help decide whether to sell or hold your stocks. The selling checklist you'll find in my book is divided into two segments: offensive selling for taking your profits and defensive selling for cutting losses and locking in remaining gains. In separate videos, we cover the two main rules: take most profits at 20 to 25% and cut all losses at no more than 7 to 8%. So here we'll focus on the chart-related warning signs and sell signals, but we'll also see how the other rules plus overall market conditions come into play as you decide the right time to sell. We'll do that with the simulation using MercadoLibre, known as the eBay of Latin America. The time frame is March to October 2011. Here's what MercadoLibre's daily chart looked like on March 25th, 2011. It was forming a double bottom pattern with a buy point of 75.24, 10 cents above the peak in the middle of the W. On March 28th, it broke past that buy point. If you didn't have MercadoLibre on your radar screen, but were checking the big picture column as part of your daily routine, you would have seen it mentioned. MercadoLibre cleared a 75.24 buy point in a double bottom base. Volume rose 43% above average. You would have also seen that the overall market was in a correction, which is not the time to be making new buys. But look at what happened the next day. On March 29, 2011, we had a follow-through day, which kicked off a new uptrend and meant it was time to start gradually getting back into the market. So let's say you bought MercadoLibre as it once again broke through that ideal buy point. And note the volume. It was 207% higher than normal, a clear sign of institutional buying. By May 2nd, you were up 22%. One guideline on the selling checklist is that you want to take most profits around 20 to 25%. That's because most stocks will pull back and form a new base once they go up that much from the ideal buy point. But let's say you decided to sit tight. The very next day, May 3rd, MercadoLibre dropped sharply and closed at the bottom of its range for the day, then continued lower the next day too. And look at the volume. It was rising as the stock pulled back. It came in 70% higher than normal on that second down day, a sign that at least some institutional investors were dumping shares. And what was going on in the overall market? On May 4th, the outlook shifted to market in correction. So the market was in a downtrend, and your stock was starting to sell off on rising volume. That's certainly a sign that it could be time to take defensive action. Remember, you never want to let a good gain disappear or worse, turn into a loss. If you sold that day, you could have locked in a nice profit around 14%. But for this simulation, let's say you continued to hold. The stock tried to rally, but ended up just seesawing up and down. Then on June 1st, it had a bearish reversal. It tried to rally, but then came down sharply by the end of the day. And look at the volume. It was 83% higher than normal, and much higher than on recent up days, a clear sign of institutional selling. So this was yet another opportunity to take defensive action, and you could have locked in a 15 or 16% gain. A few days later, on June 6th, MercadoLibre crashed below its benchmark 50-day moving average line and closed at the bottom of its range, and volume surged, coming in 124% above average. Here's one key rule on the checklist. Sell at least some of your shares if the stock makes its biggest single-day price decline since the start of the stock's run on the heaviest volume in months. Here's another major warning sign on the checklist: a sharp drop below the 50-day moving average line on the heaviest volume in months. On this day, MercadoLibre flashed both of those sell signals. It was the biggest price drop since it broke out back in March, and that came on the heaviest volume in the last 3 months. If you were still holding the stock at that time, you still could have locked in a gain of around 10% or so, depending on when you sold that day. When a stock flashes the kind of sell signals you see on the selling checklist, it typically indicates a change in trend for the worse. And it certainly did for MercadoLibre, as it tumbled an additional 29% over the next 3 months. But let's do a quick recap on how you could have avoided that damage and locked in some solid gains using the selling checklist. After buying on this breakout, you could have used the 20 to 25% profit-taking rule to lock in a nice gain of around 20 or 22%. If you had decided to hold, you still could have nailed down a nice 10 to 15% gain as the stock flashed additional warning signs. And in an absolute worst-case scenario, you could have cut your losses at no more than 7 to 8% as the stock erased all its prior gains and headed south on massive volume. To learn more about how to capture and keep solid profits, join Amy Smith and me each week for the How to Make Money in Stocks radio show. For details on how to tune in, visit investors.com/radio show. Thanks for watching.